What's up, everybody? Welcome to Cash Out. Cash Out is my weekly YouTube show where I talk about what happened in the stock market last week and what might happen in the stock market next week. Here's the thing. I just spent 2 hours with a podcast team, these guys, Mezcla of Moguls. I'm going to put all the links down below. It's on Spotify and anywhere you can get your playlist or your podcast, not playlist, but you should add it to your playlist. There. Now I don't have to edit that screw up out of the video. So we got some stuff to go into. I'm going to keep these episodes a little briefer than usual. Usually they've been an hour to half hour. I'm cutting out the questions at the end just to make the questions like the focus of the little YouTube video. I don't want to have, really good questions get lost in translation because they're at the end of some random YouTube video. So the way this show works is we talk about what happened last week and what happened next week. I'll go through some earnings that are on the docket for next week. The big story this week, I think, would have to be travel. I was watching on the news this morning and yesterday. Miami is like the travel destination at spring break. TSA said that they had the most customers ever since this pandemic started. So it's a record. That's great, right? People are traveling. I mean, all the science says please stay home and whatever. However, people are going to do what they want and they want to travel. They're going to Miami. And the airlines said that they had record number of passengers coming through. When you think about a sector, this is something that I actually just talked about on the podcast. When you're thinking about making an investment in something, you have to look big picture. You can't just look at the very small travel. Okay, it's travel. You gotta go bigger than that. You have to go bigger than travel. You have to look at every sector. You have to look at everything that's involved in that industry. It's not just people are traveling. Great. Think more broadly. That's what I encourage you to do as an investor. Think more broadly. Don't just, it's travel, airplanes. What else is involved when you're traveling, right? You have to look big picture. How are you going to get to the airport? I mean, maybe you can bug your roommate to drive you, but maybe you and your roommate are the ones who are going on this trip together. Then who's going to drive you? Maybe Uber or Lyft. So maybe now these companies that have taken a little bit of a beating because no one's driving anywhere, no one's going to work, no one's Ubering on the weekends to restaurants or whatever. If things start to gradually improve, Uber, Lyft. Hey, how are those Uber and Lyft drivers going to get somewhere? They're going to fill up their car at the gas station. So maybe gas is going to be getting used a little bit more. Everyone's going but I thought Biden was going to be this environmentalist green energy. Well, yeah, that's the plan. But we're not going to go green energy tomorrow. It's going to be impossible. You're going to have to phase it in over the long term. In the meantime, people are still going to be using gas, right? They got to fill up their cars. They got to fill up their planes if people are going to be traveling more. So those are some sectors you have to more broadly think of as an investor. You can't just go travel, airlines, airplanes, got it. There's more to it. Where are those people? How are they going to get there? Uber and Lyft. How are those Uber and Lyft drivers going to pick you up? Gas stations. Where are you going to stay when you arrive? At a hotel, at an Airbnb. Airbnb, didn't they just go public a few weeks ago? What are you going to do while you're on vacation? Maybe if you're in California or you're in Florida, you might go to theme parks. Are the theme parks reopening? If they are, great. If they aren't, maybe they will be soon. So that should be something that's on your radar. Disney, stuff like that, who owns, these theme parks. You have to think long-term as an investor. And let's just use a personal experience here because, full disclosure here, every investor that you're going to come across is going to have losses. And anyone who tells you that they never have losses is full of shit. Any investor is going to have losses. And anyone who tells you that they never have losses is full of shit. They are lying to you. Even experienced traders have losses. In fact, just the other day, there was someone on TikTok, I can't remember who it was, who was saying, yeah, normally I cut my losses at 4%. But I held because I thought it was going to get to a lower support level and it broke support, and then I held a little bit longer than I should have, so I ended up with a 19% loss. That happens to everyone, and it's going to happen to you. It happens to me. It's something that has happened in the past and it will continue to happen. So I wanted to give you 2 real-life examples of some companies that I have been holding on to as long-term investments for a very long time, and they were at one point very profitable, and now not so much. And those companies are Ford and Funko. The reason I mentioned Funko is because I had Funko on the show last week. I mentioned Funko last week because their earnings were coming out. And so I led with Funko a little bit as a little background. to Funko. And I've mentioned here on the show as well, one of the things that I do is I trade in my bubble. I talk about that a lot. I get a lot of messages on TikTok. What do you think of this one? What do you think of that one? I've never heard of half these companies. I encourage you to simplify things by trading in a bubble. And that means you've got your tried and true stocks that you trade. And for me, a couple years ago, it was Funko. Funko was bouncing between a range, I can't even remember anymore, but it was between 10 and 20 bucks. And it wasn't that wild of a range, by the way, either. I think it was like 17 to 20 or 12 to 15 or something like that. But it would bounce in these ranges and I would trade it. And that was pretty much, I think it was 2018, maybe even 2019. That was the stock of the year for me. If you were to look at all of my trades, you're going to see tons of stuff. But the standout is definitely that year going to be Funko. I traded Funko nonstop. It became a company that, even though I was trading it, I became invested in the company as I was curious. I wanted to see what they were going to do as a trader who, you see these trends pop up. Beanie Babies is a prime example. If Beanie Babies had been a stock in the 90s, it would have rocketed and then plummeted because, who has Beanie Babies anymore? So when I see a stock like Funko, which is like the hot stock, I'm curious because they surely are aware that they are heading into trend territory. What will they do to set themselves apart from just being a trendy in the moment toy like Beanie Babies? How can they maybe shift their business model away from we're just a trendy hot toy to something that can be around for a while? Now, Funko has licensing deals with tons. I mean, WWE, NFL, James Bond, Metallica. There are Funko Pops. That's what those little toys are called. There are Funko Pops for literally everything. Now, you might be saying, well, hey, if you like that so much, how many Funko Pops do you own? Oh, well, if you're listening on the podcast, I just held up the big old fat 0 because I'm a minimalist. I don't buy stuff. I prefer to buy the stock. But plenty of people buy the stuff. And they're obsessed, right? They love Star Wars. They have all the Funko Pops. They have collections of them, much like the Beanie Babies of the 90s. But there are rumors that they're moving into, not moving away from, but just incorporating more things. Maybe they're getting a Netflix show, an animated show to sell more Pops, create their own line of characters. That could be something. Anyway, I was in Funko for a while, and I picked up a lot of shares 2 years ago, maybe a year ago, around 20 bucks a share. And much like that other trader who was saying, hey, you have your plan, we all have our plan, the stock started to drop. It started to drop from, I think it hit a high of like 30. And then it started dropping. And I was like, well, I'm okay because I'm still in the 20s. So I went from having a pretty nice profit. This is 30 and this is down here, 20 where I entered. I'm slowly chipping away, getting lower and lower, eating into my gains. And I'm sitting there going, shit, it's getting close to break even. Anywhere here, I could have sold and locked in a profit from 30. I bought at 20 and it got all the way up here to 30. At any point, I could have locked in those gains, but I didn't do that. You got to learn from your mistakes, and you got to traders have to be honest. The traders who come out and say that they have never take any losses and they're just 100%, they're lying to you. I'm watching my gains get erased. And then I'm watching my gains turn into losses. And then I'm watching it turn into bigger losses because I'm sitting there going, no, I don't want to be wrong. I mean, even 10 years trading, you're going to be wrong sometimes. I didn't cut my losses. And it got to the point where I didn't want to cut losses because I didn't want to walk away on a 30% loss. It could have been one of those devastating trades that you just end up getting completely wiped out and you lose everything. What if Funko had gotten all the way down? I think I got my computer here because I was on that podcast a minute ago. Let's just see what Funko was a year ago. Actually, I could have done the whole thing. I could have been looking this whole time. Funko got all the way into the threes. So I was sitting on a 70% loss on the stock. Even as an active trader 10 years in, these things happen. It got to the point where I just didn't want to take a 20 or 30% loss. Now, of course, in hindsight, you're sitting there going, shit, I should have taken a 20 or 30% loss because it went all the way down to 70% loss. But I didn't. Yeah, it was up in the 30s in 2018. It must have been 2018 when I was trading it. And then again in 2019, it was bouncing around between the 20s and the 25s. Yeah, and then it sold off, and that's when I got stuck. One of the things that I did, though, is that established a new trading range in the $3 to $5 range was I started trading it again. And I was able to eat into some of my losses, but some of my losses I just held on to. And now here we are. They posted earnings last week, and the stock looks like it's steadily climbing up. It closed at $17.77 on Friday. So some of the shares that I was able to buy in the 10s and 12s and 13s, I now was able to sell. And the position that I have in my $20 range, I'm this close. So this is one of those stories where you hear about it and you go, it's one of those full circle stories. Wow, you started at the 20s, went down all the way down to 3, now it's back to 20. What are you going to do now? Personally, what I'm going to do is I'm going to hold my position at 20, and we're going to see where it goes. I'm going to look at the support and resistance lines. It looks like it could get to 30. Maybe it gets to 30, great. If it doesn't this time and it starts to drop, you best believe I'm going to cut my losses this time because I have learned from my mistakes. I am that kind of trader. I learn from my mistakes. The other one that I wanted to talk about, one of these like full circle stocks, is Ford. Ford was a great stock many years ago. 3 years ago, let's see here. 3 years ago, they were paying a 15-cent dividend per quarter. It's pretty good. 5 years ago, though, this was when I was really investing in Ford. Yeah, Ford was around $17 when I started getting in as an investor because their dividend was so great. And then around 2014, 2013 is when I was picking up a lot of Ford stock. And then it just got hammered. And I thought, well, it's getting hammered, but they still pay this dividend. And it still is a company that I believe in long term, so I'm going to hold. And Ford ended up going all the way down to around $5. Yeah, also around $5 a share from around 15 to 17. But again, because it's a company that I believed in, unlike Funko, I wasn't sure about Funko because Funko seemed like it could go the route of the Beanie Baby. So when Funko was in the 3 to 5s, I was actively trading. When Ford was in the 3 to 5s, I was actively adding to my position as a long-term investor because it's a company I like and it's a company that I believe in. And even though they've had problems, they slashed their dividend. That was bad, and that caused the stock. Look, if you're looking here on the chart, it was around $10 a share when they last cut their dividend. It was $9.29. They slashed their dividend, and gradually over the course of the next several months, it gets all the way down to $3.96. Ouch. And that was largely, I think, due to the fact that they were having serious financial problems. This was in their last dividend was in 2020. Feels like it was so much longer ago. Could that be right? Yeah, the last dividend was in 2020. Wow. Anyway, the point is that there are the tale of two stories here. There's the one with Funko, which I didn't cut my losses, and I got crushed, and I learned from that. But I also didn't have high hopes for the company going forward because it could likely go the route of the Beanie Baby. So I traded it. The other tale is the story of Ford, which is a company that, despite their problems, I believe in this company, and I like this company. And I actually even own a Ford, even though it's a 1985 Ford Bronco, and I bought it on eBay instead of from a dealership. I love Ford. I love the new Bronco. I think the Bronco will deliver big. And I think the Ford company also has learned from what they maybe got too big. They had a million different cars and they've downsized dramatically. Hey, maybe even Ford has embraced minimalism. Less is more. They got rid of their sedans. They got rid of a lot of their models, and they're focusing on what brought them to the dance. Mustang trucks, boom. And now back to the Bronco. So I have been adding to my investments in Ford all these years. And of course, as Ford has been climbing back up steadily from $3 to $10, I have been selling some of that position that I have. So the point to this is, it depends on the stock. It depends on your personal experience with the stock. It depends on what you believe in the company or what you don't believe in the company. So they have both, and the reason that I'm talking about them on this episode is because Funko had really good earnings and the stock skyrocketed. Of course, I'm not a licensed broker, financial advisor. I'm not telling anyone to go out and buy stock in Funko. I'm just sharing a personal story of how I got crushed, learned from it, and now have seen the stock rally back up. And I'm going to be much more cautious this go around than the last. And the other tale is the tale of Ford, which was a company I really believed in and really liked. Watched get slaughtered, crushed, cut dividend, and now they're slowly building back up and they're coming back, and maybe they're going to come back strong. Maybe imagine at a point somewhere down the road they can bring back that sweet, sweet dividend. Would be great. I would love it. That's pretty much all I got on the docket this week or from last week. It was another relatively quiet month for me, or week for me in trading. February was a little quiet. It looks like March is going to be a little quiet as well. This is, of course, the importance of having that nice rainy day fund set aside so you can have money to live off, so you don't feel pressured to make trades. You know, sometimes there are just no trades available, and that's okay. New traders feel like they always have to be trading something. And if you're a new trader who is depending on this income, this might be a lesson to you for these very slow weeks, very slow periods of time in the stock market, that you either need to have an ample rainy day fund or the ability to go pick up some sort of part-time job if you get bored or if you need it. Let's see what else we got on our little list here, because I'm keeping notes. I'm using these notes to make the show a lot faster. But I think I covered it all for last week. Next week, the stimulus has passed. People are going to be getting their $1,400 checks, maybe more depending on how many kids they have or if they have kids, or if they qualify. Some people aren't qualifying for this, who make that sweet, sweet money. If they don't need it, they're not getting it. I would imagine. So the first stimulus that we got under Trump, lots of people dumped it into the stock market. Maybe because they didn't know how bad things were going to get with the economy. Are we going to see more people dump their stimulus money into the markets this week? Potentially. That could cause some market rally. We've also got some pretty good news coming out, right? All this travel is good news in a way. It could, of course, be come to find out that it's devastating news if lots of people, they're saying spring break in Miami could be a super spreader event. That could cause problems. That could cause more setbacks. We're going to have to wait, I guess, and wait and see. But the stimulus is good news. The gradual, slow announcement of some openings is good news. Maryland is increasing capacity safely. Florida, New York, California are planning on reopening some theaters. That could be good. Sports might be returning to some like smaller capacity crowds. That could be good. Again, let's think of that travel analogy. How else is the return of sports going to be good? And what other sectors will benefit from the return of sports? Stuff like DraftKings, maybe. So you got to think about these things. And, you know, we're going to be getting stimulus money. Some people might invest it. That could move the markets a little bit higher. February had really good jobs data. You know, maybe we're on point to having a little bit of a recovery here, or maybe not. You know, I mean, everyone's talking inflation. I don't think the inflation is going to be as bad as people think, although, you know, could be wrong. We'll see. Now let's get to the earnings. There aren't very many companies that are reporting big earnings this week. On Wednesday morning, Cintas, I don't know if that's how you say it, Cintas is like uniforms for employees, sanitary stuff for office buildings. You know, I guess we'll have to wait and see. That one was curious to me just because they're in the retail sector, and if the retail sector has been hurting in restaurants, so they're not getting uniforms as much, if restaurants have been closed, sanitary stuff, maybe they're ordering less if the restaurants have been closed, blah, blah, blah. That would be one of interest. I never invest in these companies before earnings. You know, usually I just like to keep an eye on them, see how they're doing. That's Wednesday morning. Nothing Wednesday evening. Oh yeah, Wednesday evening is Five Below. I like Five Below as a COVID play because people are hurting financially and they need to be able to get stuff for themselves or for their families that are affordable. So Dollar General, Five Below, stuff like that are companies that I always pay attention to in these economic downturns. When you're looking for investments and you're going, wow, people are getting laid off, people are hurting, people are being downsized, people aren't working as much, people aren't spending. Where are they going to go? Because they still have to spend. People still have to buy things. Where are they going to go? They're going to be going to the places where they can get bargains. So Five Below benefits. Thursday morning, so the very next day, Dollar General has earnings coming out. And then finally, on Thursday morning, we have Nike. Should be interesting to see how they do. So I think that just about covers it. Slow week for earnings, maybe good week for the travel sector, the airline stocks, the travels, the cruises, the hotels, all those things. Maybe we'll see a benefit from what we've seen with spring break in Miami and all of that stuff. Maybe not. We'll have to wait and see. Just something to keep an eye on. I was on Mezcla of Moguls podcast. I will link it everywhere so you can listen. The episode will be out tomorrow. Check it out. It was a lot of fun. It was 2 hours. We covered a lot of stuff. It's going to be really, really interesting. And thanks for watching, and enjoy the rest of your weekend.